All right. Good afternoon, Brad. I uh
Good afternoon, Bruce. How are you?
I'm doing very well. I'm excited to do this webinar with you. And I let's see, 301. I'm still waiting for a few people to join this webinar, so give them just a few minutes.
Sure, absolutely.
All right. And happy happy Tuesday to everyone that's joining. I appreciate you being here. All right. So let's get to it. All right. Well, thank you everyone for joining today's webinar on how technology improves WIP and cash flow. I'm Bruce Orr. I will be facilitating this and alongside Mr. Brad Robinson. Brad is a person that I've gotten to know for quite a while. I would also consider him a friend. And Brad, if you wouldn't mind telling us a little bit about yourself.
Sure. So my name's Brad Robinson. I um, spent about 30 years in the profession in a variety of different capacities. I started my career in public accounting, as most of us do. Moved over to construction finance. I worked for a really large international contractor as the treasurer for a number of years. And then most recently, I was the CFO of a group of a conglomerate of seven different family-owned businesses that were especially trade subcontractors, and been highly involved in trade groups associated with the profession for a number of years as well. So very happy to be here and participate today.
Yeah, absolutely. Well, Brad, I want to take a moment and sort of set the stage about what we will be talking about and why the WIP matters. Just like you have had opportunity to help contractors improve their business by utilizing the WIP. I have two here at ProNovos. We are a technology company that focuses on helping contractors understand what's driving profitability, cash flow, and oftentimes the WIP is at the center of that. Brad, I recently learned about something that was kind of interesting. I was speaking with a surety, and he talked about how companies having a WIP culture, and I'm curious, have you heard of this concept before?
Not specifically the term whip culture, but I presume this is the idea that everybody in the organization that has a responsibility for driving the success of the business understands the process of work in process, why it's important, and it takes everybody, both in operations and finance, to work together. Perhaps maybe that's what your surety friend was kind of aiming for. That would be my take on it anyway.
Got it. Yeah. Well, and it's very similar to what you are saying. The WIP culture is based upon um, everyone is at a place where they feel that they contribute to the WIP. It's just not a financial instrument that's only for the executives. From the superintendents to the project managers and on up, everyone is having some influence over what you see. Not to mention, what was really interesting, Brad, that I heard about this is when someone is creating a WIP culture within their organization, what they tend to find is they would have a smaller premiums around insurance. They just care for things a little differently. And I understand that. I get that you have processes that you are adhering to manage the data. So this idea of having a WIP culture coincides with something that I like to talk about. And I'm curious, Brad, if you've ever um, heard of companies having a data culture. it's probably one and the same, but just curious if that's something that has come across your desk before.
Um, Not specifically. No, I just realized I lost my video there. But I guess you guys probably saw me at the beginning and know what I look like. Apologies for that. Not particularly, Bruce. You know, my experience has been, that the generally the larger the contractor, the more profound and detailed and consistent the work in process, if you will, is for managing their work. I've noticed, oftentimes smaller contractors in particular, uh, in my experience with clients now as a consultant, don't necessarily view the WIP schedule in the same capacity maybe as a larger contractor that deals with larger projects.
Yeah, yeah, that makes sense. So I'm curious, why do you think it's important to do the WIP um, every month versus every quarter or not doing it at all?
Yeah, that's actually a good question. I actually had this conversation with a client the other day. I would say, and how often do you look at your credit card statement, or how often do you look at your bank statement in your personal life? Would you go 90 days without checking your bank balance, or would you go that long without looking at a credit card statement? I would argue, especially for this in this profession, probably not. So it's about information, and having
Mhm.
information on a timely basis will allows the contractor to make the decisions that need to be made in order to manage their business. So I think the WIP schedule is the one major, most important process that accounting and operations work on together in order to make the business successful, and um, to see things or perceive things before they actually occur, anticipate issues. If you're not doing it monthly, you may not even know you have a problem until the problem's already happened. So I'm a
Yeah,
big proponent of doing it monthly for sure.
yeah, yeah. And so when you're doing it monthly, some of the challenges that I know contractors face is the amount of friction it takes to even get to results that are accurate, that they can depend upon. Most contractors are doing their WIP in Excel. So for a contractor to try to get to a monthly WIP, and it takes a lot of time, are there any um, suggestions that you might offer them to help do it more often if they're doing it quarterly?
Um, Well, I mean, I think I would say don't wait until you have a problem before you decide to do it monthly. That's all what happens oftentimes is people realize after they've done it or they're doing it purely for accounting purposes. I even know of companies that don't do it at all. They just go on the cash basis, and then they convert to accrual and do an end of year WIP schedule. For the life of me, I don't understand how you manage a contractor and not know where you are in your projects. I mean, I guess if you have a lot of very small contracts that are very short term in duration, you might be able to get by without it. But even in that case, I mean, coming from a small contractor, I was the CFO of a scaffold rental company, and we had a WIP schedule that had hundreds of jobs on it, and sometimes they might not even last a month. And I had people say, well, why are you doing that? Why you need to know? Because if there's a problem within that month, I want to know about it before the end of the month. So it's all about information. I also think it's about accuracy too. I mean, I think, um, you know, I've had situations in my career where I've had guys in operations that will, for sake of a better term, sandbag a job, where they will hold back revenue recognition to the end, and with the idea that if there was a potential loss, they could cover it with what they were holding back, and they wouldn't share it in our WIP meetings. And, you know, I think that in and of itself, I understand why people do it because you're thinking, well, it's good to have I always want to be positive. I always want to come out with a credit on the end, or at least hit my forecast. The problem with that is, as the CFO, my argument was I couldn't do anything about it if I didn't know about it. And I don't want a surprise. I don't want to get a 20, 40, 50, $100,000 pickup at the end of a job when I could have been recognizing that revenue over the duration of the job. So it's just as important to me to know it's about accuracy. It's not about being under or over. It's about being as close as you can to where you are forecasting to be. And it took some educating of this individual to help them understand that not having all the facts and having a credit at the end, in my mind, was just as bad as ending up with a $40,000, $50,000 hit at the end of a job. So it's about accuracy in my mind.
Yeah, yeah. I should have mentioned this. If anyone has questions or comments, please drop them in. And we do have a more of a comment, which I love to hear your take on this, Brad. But it's my biggest issue for the WIP is motivating the project teams to get their invoices approved. Monthly or quarterly doesn't really matter. Their priority is to build buildings, not do accounting. And I'm kind of curious if you have any opinions of that.
Um, yeah, I think, you know, the best builders are just that, they're builders. And, there's always going to be some natural friction between finance and operations, and especially in a contractor. I think if they being operations believes that you're just there to be the gotcha, like you made this mistake, made a mistake, gotcha, that's not really our role. Our really role is more about providing the information in a way that's palatable to everyone in the organization, and to get them on board to understanding the importance of why the WIP schedule needs to be accurate. Um, Oftentimes that comes from the top, and it comes from the tone at the top and the leadership at the top, and especially at the top of operations. I found that if I did it and I would push the envelope, I would get pushback. If the head of ops would do it, then they would listen to that individual. So I think it's really back to your original point of having a WIP culture. It's having the culture in an organization of understanding the importance, the critical nature of what the WIP schedule does and what it tells us when we do meet and we produce financial statements on a monthly basis.
hmm It's interesting that the key word that I focused on in that comment was motivating, and I think that while yes, we do want the project team to focus on building buildings and spending less time in front of their computer, um, the result of what they're doing shows up in the finances. So, regarding approved invoices, that has to obviously be accounted for. But I'm kind of curious to hear from you, Brad, in your prior career as a CFO, was there any lever that you use to help motivate the project teams? I don't know, in bonuses. I'm just curious to hear.
Yeah, yeah, absolutely. Yeah, I found at my last employer that we had a difficult time getting some of the division operational leaders on board, and so I tied a portion of their bonus calculation to targets in the WIP schedule. And what I mean by that is not holding them accountable for profit fade necessarily, things within their control. And we would get into some back and forth over what was appropriate or what wasn't. But the idea wasn't necessarily to punish anyone. But generally, my experience has been that if um, people are motivated for a lot of reasons, but most of us by money. And if there's bonus compensation that's tied to targets related to the WIP schedule, what I mean by targets is show up for the meetings, present your information in an accurate, measurable way. Um, run down issues and control those issues, things that they could control. I wasn't going to punish someone for, something that was out of their control. But we saw a significant difference when we tied the participation and the seriousness of the WIP schedule to their bonus calc, and it would really help people understand the idea that this is not just an accounting exercise. This is not just paying a bill, running payroll, doing the things that we do, paying vendors. It's more about all of us being on the same page about what jobs are doing, what the issues are, how we can identify those, and most importantly, how we can address those before they get to be bigger issues.
Mhm. Yeah, I think that makes sense. I do love that. Earlier, you mentioned sandbagging, and some of the project team members would basically hold on to profit early on, and when it was time for you to really understand where the project really stood from a financial perspective, you would be surprised. And I know that surprises aren't good, even if it's going in the direction of black instead of red. I'm curious. In situations like that, it also comes down to forecasting accuracy. So when you look at incentivizing the project teams in some way based upon information on the WIP, is it related to forecasting accuracy too?
Um, Surprisingly enough, in my experience, no, because um, and it's kind of a difficult question. So it's kind of a yes and no. Yes, in the sense that did you report all of the things that you knew or should have known at the time we had the WIP meeting at that point? That would be, yes. So for example, if you didn't get all of your costs in, or there's something that popped up that you should have known about that you did, and they're pretty obvious inside of the scope of a job to know the differences between these two. Yes, but if there was something that happened, for example, maybe you had a subcontractor that walked off the job, or maybe there was a weather delay or some of that, things were outside of their control. Clearly, we wouldn't hold the teams responsible for that because it was something they couldn't do. So they couldn't do anything about. So it was really more about holding people accountable for the things that they could control.
Mm, that makes sense. That makes sense. Well, so part of managing a WIP is being able to understand red flags early on the WIP. And so for that, I'm curious to hear what are some of the earliest red flags contractors should be looking for in their WIP process?
Yeah, that's a great question. I think first and foremost is underbillings, where we have cost accumulated on a job and the job hasn't been billed timely. It's kind of difficult for your client to pay you if they haven't been billed. And in order to do that, you have to have accurate cost in the system to be able to understand what your costs are in order for accounting to bill those costs. So if there are costs that are not in the WIP schedule, this goes back to holding people accountable that I can't bill for. Um, that's a big one, underbilling. I would say, you want to try to minimize as much as you can profit fade on a job. And I say minimize it because I think, I mean, you can't eliminate it. It's going to happen from time to time. But generally, my experience is if the WIP is done accurately and timely, then you have a pretty good idea of where you're going to end up, and you should be able to adjust the profit numbers in your WIP schedule accordingly. I know I used to tell my contractors when we get to the end of a job, normally the profit fade would happen sometime somewhere between 85 and 90% complete. And when people say, "Oh, well, we're done with this job," and they would say, "Done, but," it's funny. I just saw this on LinkedIn the other day, something very similar to this. We're done, but, and I would say there's no such thing as a done, but it's either done, or it's not done at all. And what I mean by that is when you tell me that the job's finished, I don't want to hear, but we need to bill for this. Oh, we've got some trailing insurance costs coming in. Oh, wait a minute. this sub or if you're a subcontractor, maybe a secondary sub or supplier had an additional billing, then you're not done. So if a
Mm,
job shows me it's 100% complete, I expected it to be 100% and not 100%. But because if you do it as 100% and then costs come in, those debits go to the balance sheet. I mean, I'm sorry, go to the P&L. So you
mhm.
you want to minimize that to the extent that you can, obviously. So always try to be as accurate as possible with your costs, what you think your costs are to date, what you think your costs are going to be. Adjust those accordingly, period to period, because they're going to change. Change orders change those. A lot of circumstances on a job will change your cost forecast. And then whether costs can be billed or for whatever reason they can't be. All of these things make the process work. So a red flag to me would be if I'm starting to see costs build up and there's not a bill, not an invoice going out, I don't understand what's going on. Why are we got such a large underbilling? Or if we have one manager, for example, and every single job we have profit fade, I'm going to be going, what's going on with this individual? Why can't we forecast these jobs accurately for this project manager? Okay.
Mhm.
So in order to make those determinations, the information has to be accurate. So I guess I say it this way: you can only have a red flag if you've got data in the WIP schedule to show you that there's a problem. So it's all about information. If you don't have it, you don't know. You can't work together as a team to try to address the issue and correct it before the job is complete.
Yeah. So I'm curious, do you have examples of in your prior career of where you would spot red flags and be able to be proactive?
Yeah, well, one I just mentioned, I just had this recently. This must happen in my last CFO job, and then I'm working with a small contractor now in the Midwest, and they're actually in the process of changing the way they do their WIP schedules. Why they engage my partner and I to help them, um, where they have a situation where we have an individual who is not putting cost in that are anticipated in the future, only cost to date. But when they were doing their forecast for cost in the future, they were leaving off cost to forecast. So consequently, they thought there was more, the owners thought there was more profit in the job than there actually was. Um, so yeah, that's probably the biggest issue. I think if if a contractor isn't having regular discussions between the two functions, between finance and operations, so that operations can understand the accounting functions that are driving the actual cash flows of the job, and then of course the accounting needs to understand in operations what's actually happening on the job. I think not having regular meetings is also an issue. I know that was something in my former life as a CFO. If we ever canceled the meeting or missed the meeting, and we would have people that were very difficult to get together to try to refocus on a meeting. Invariably, when we had the next one, we have problems. So
Mm,
spotting issues is important, and only doable if you're doing it regularly. You've got everyone focused, and then people have to be willing to accept feedback about and not take things personally around things that are being done on the job or not being done on the job, because it's all about making the process better.
yeah. Um, not taking things personally. Think that's kind of hard when you're a project manager and you're pretty much looked at as the CEO of that job. But I certainly understand what you're saying. It's in the spirit. It's in the spirit of being a team player and removing that gap or bridging that gap between accounting and the project team. Um,
Exactly.
let, let me ask you a question, Brad. This is Please, I hate to throw a curveball at you, but you got my mind thinking, and it really is focused on probably not necessarily red flags as it relates to the WIP report, but more about if a contractor wanted to be a bit more forward looking, using the WIP to identify leading indicators to how a job might end up turning out, could a whip be used to in that sense? Could it be? Because I know a lot of times contractors will look at a whip and it's after the fact, right? I mean, obviously you're forecasting your costs, but
Right.
how can a whip be used as a leading indicator?
Um, I think, well, that's a great question.
I'm
I think,
sorry to throw a
no,
curveball
no,
at
no,
you, but
no, that's okay. That's okay. That's okay. I think, you're right. Historically, you're looking back in time at costs that have been communicated that need to be billed. I think I would answer that question two ways. One is the accuracy of, as we've mentioned, of cost and what costs you believe you're going to incur in the future versus cost to date, which is where you're driving your percent complete, obviously. But also, I think the frequency and the accuracy of the information that you're getting. I think we're going to talk about some alternatives in a few minutes about some alternatives to manually processing a WIP schedule. But I have
Mhm,
found that there are tools in the marketplace to give individuals an idea of literally where they are on a moment's basis. They can look online and see what their job costs to date are, assuming the information is getting entered accurately, where they are exactly at that point in time. So as far as looking into the future, if the information is correct as a leading indicator, then the more accurate the information you have now and the more accurate information that you believe you're forecasting into the future, knowing it's a forecasting, knowing it will change, but over time, as you become more and more accurate, you can identify potential issues in the future today.
mhm. Yeah, yeah. There's so many other thoughts that I have about what you just said. You use the word accuracy a lot, and I think that it is truly important to be as accurate as possible. And unfortunately, every month when an adjustment is made to the forecast, that's your opportunity to be accurate or wrong. And it's not only the contractor that's looking at this, right? It's everyone else in the ecosystem that might need to look at your information, surety companies, bankers, CPAs,
Yeah.
and
I'm sorry, go ahead. Sorry, I didn't mean
no,
to interrupt
please,
you.
please, Brad, please go for it.
I think one of the things that contractors tend to do, and this is more, um, well, let's see. The operations guys generally think it's just an exercise in, I've got to go to this WIP meeting. This doesn't impact me. It's just some stupid accounting thing. That's what you get a lot. But I think we're as guilty in some capacities, finance leaders, because a lot of times we have, again, working with smaller contractors in the life that I'm in now, where it's looked at purely as a compliance exercise for credit providers. So it's not really looked at as something to manage my business, but it's something that I have to do for the outside CPA or is doing my review or my audit. It's done for sureties. It's got to be done for the sureties for them to understand your surety credit where you're doing bonded and unbonded backlog, and you have to provide that information. But they don't really think about it as a proactive tool for running their business. And these are typically the same contractors that are only doing it quarterly. So it's trying to get people shifting in their mindset to say, this is not just a compliance tool. This literally is your business. This is your business. This document of determining where your costs are versus what your costs are going to be and when you can bill based on your contract. That information is what is the primary driver in a contractor's business. So if you get people out of the mindset, if it's just simply compliance, it can make a huge difference in the way that company is run and managed. I actually have an experience with a company right now that was doing exactly what we've talked about: quarterly WIP schedules, purely looking at things as a compliance driver. We spent about, I don't know, a couple of months working with them, changing the mechanics of the way they do their WIP schedule, but more importantly, trying to shift the culture from looking at this as just a compliance exercise to a tool for them to manage their business. And it was incredible the difference that it made in such a short amount of time. Now, that's not anything magical that we did. It's really more about help. They always had the potential to do it. They just needed somebody to kind of help them see this is what other contractors are doing. Most people are really interested in their other people in an industry, whether it's their nearby competitors or maybe just other contractors around the country. Who's doing this the right way? What are the best practices? Who's building the better mousetrap, and how do I get that information? These guys were curious, but they weren't curious enough to change old habits. And
Mhm.
someone thought it might not be a bad idea to get some help, and they fundamentally changed their business. I mean, the way they were managing their business was purely transactional, purely compliance driven, and they really weren't giving enough focus to the WIP schedule to show what it actually meant to their business. And now they, out of the gate by going to monthlies and also looking at the accuracy of their forecast, jobs that they have historically lost money on, now they're making money simply because they changed the way they looked at the WIP schedule to drive their business versus it being simply a compliance tool for their outside credit providers.
So if I could play devil's advocate here, let's say I'm a mid-sized contractor, small to mid-sized contractor. You're telling me to look at this WIP to help improve my business, and for the most part, in commercial construction, WIP is based on an accrual method, right? That's fair?
But
Fair to
yeah,
say?
yeah, cost, yeah.
Right, right. So to me, my biggest concern is cash flow. This does not represent my cash flow, and I could see why someone would want to look at the WIP from a compliance perspective, but also it keeps me in this on this perpetual wheel of growth, right? I'm not getting to where I need to be because I'm not changing my habits. I'm just looking at my next cash flow needs, which is going to be my next curveball that I would like to throw at you. Brad, if you wouldn't mind, how can contractors use the WIP to understand capital needs for the business? I know rarely do I ever have conversations where capital needs are talked about from looking at the WIP.
Yeah, actually, that's a great question. And I think this probably speaks probably more to subcontractors. Not that generals don't have capital needs, but generally, especially if the general contractor outsources most of their work and they don't, or they subcontract most of their work. Um, it's capital needs typically aren't as big of an issue for a larger general than they are maybe even a smaller general or sub. The reason it's important for subcontractors is, subs generally have higher margins on their jobs versus generals, but they also have to wait a long time to get paid. So even though, in a lot of states, paid when paid or paid if paid clauses are not legal, it's still a common practice in this industry. So that a lot of times the general contractor won't pay until they've been paid. And then, if think about it, if you do work for 30 days, then you roll your invoice up to your general, if you're the subcontractor, they bill it. It's going to be, and the terms are 30, so it's going to be at least another probably 45 days before the general gets paid. And then even if they're fast, let's just say they pay you on the fifth day after they're paid. Okay, so that's 45, 50 plus the 30. That's 80 days automatically you're going to be out of
Yeah.
pocket from the standpoint of the time that you build. Now, so what do you do? Because the business keeps running. You still have cash payroll. You still have to pay your vendors or suppliers. You have administrative costs you have to pay, keep the lights on, etc. So what do? Traditionally, a lot of contractors relied on bank lines of credit because they provide quick liquidity and the ability for the contractor to borrow against the line to pay those. And then, of course, they pay down the line once they're ultimately paid. That's not necessarily, in my opinion, that's not a bad thing. And I would advocate that I would advocate that every contractor have a line of credit, but there are other tools in the marketplace that I've been exposed to that give the subcontractor an advantage for uh, liquidity and for capital needs that are outside the scope of simply a bank line of credit. So,
Okay.
for example, so the next question is like for example, and I think you guys do this if I'm not mistaken, at ProNovos, but there are vendors in the marketplace that will allow the subcontractor to take a small discount on a payment in order to get paid today. And, I know we did this when I was a subcontractor, worked for the subcontractor where people would look at me and go, wait a minute, we're going to give up 1% or 1.5% or whatever to get our money today. And all you'd have to do is look at the math, look at what your cost of funds are from the time that you would have gotten paid, discounted back to today. And typically the amount of discount that you take on that payment is significantly less in cost than what it is to taking it all the way out to 80 days, especially if you're having to draw down on your line and pay interest on top of that as well. So, and I'm not necessarily, it depends on the subcontractor, it depends on the nature of your business, depends on the work that you're bidding. I mean, there's so many variables here, but I would say that from a capital needs perspective, there are avenues in the market that will allow the contractor access to liquidity outside of just the normal traditional line of credit.
Well, going back to again, I really like how you phrased that some contractors will use the WIP to be compliant for credit. Um, and I want to kind of go back to the WIP and looking at this to understand. I mean, obviously, this is not a cash flow tool, right? We have a separate tool for that. But when someone's looking at their WIP, let's say I take your advice, I want to manage my business um, through the lens of this WIP. I want to get better about profitability. I want to manage my over under billings. I want to just become a better business person. And cash flow and capital needs is certainly part of this. Would you suggest to a contractor that they add an additional metric to the WIP that determines their job level cash flow, or would you recommend that they go to another financial instrument like a cash flow forecast?
Um, well, I think all contractors should have an overall cash flow forecast,
Mhm.
just like any other business. But I think you hit on something that's really important. I think one of the things that a lot of contractors do, and I think it's a good practice, is have a project level cash flow in addition to their WIP schedule, because the WIP schedule is going to show cost to cost and when you've billed it. But a project level cash flow will show, when you've billed, when you've collected, and what your costs are to date. And you
Yeah.
always want that number to be positive, right? Because, it's ideally collected, but I mean, that's not always going to work. So you would want it to be in a situation where your billed and collected cash is either equal to or greater than your cost to date, which is effectively an underbilling. Depending on the contractor and the situation, it may or may not be. So I know when I worked at a general contractor for a number of years, they did not use project level cash flows, just use the WIP schedule in and of itself. The WIP schedule will help you determine what your costs are and show you when and how much to bill. What it doesn't do is show you necessarily where you are on a positive or negative cash position on that job. And I think that in and of itself is a nice supplement by job to the WIP schedule or the WIP process for a project.
Mhm. So in your day when you were working with a contractor as a CFO, I'm sure that you've had supplemental tools to help understand and dig into the WIP like Excel. And I've seen some impressive Excel files out there with, you know, we're going all the way, I don't know, triple character letters, ZZZs, so lots of columns in the Excel sheet. One of the things that I always notice that I'll give credit to financial managers, financial professionals in construction is when you understand how you want to use a WIP or use the information that you have, there's always basic elements that you build upon and you get creative around the calculations to get somewhere. That when we built ProNovos, and this is probably any tool out there, I think one of the things that we have to do is try to understand how do we become sort of fortune tellers if we could, or unfortunate tellers, however you want to look at it. But we want to look further out to understand where we're going to end up at, not only on one job, but multiple jobs, because most WIP schedules consist of more than one job, right? It's going to be aggregated at the top, and we want to know what that looks like. The reason why I was asking you all those questions about capital and about being able to look further out in terms of a leading indicator is because I know the data is already there. It's just being able to access the data and and whether you have an Excel spreadsheet with a bunch of columns in it, or you're using a tool like ProNovos, being able to get past the basics, I think, is important. Being able to understand cash receipt, uh, building a job level cash flow, because the information is there, and most construction accounting systems will provide it. It's just a matter of the manual effort to get to where you need to be. And, you know, Brad, I kind of went off on a different on a tangent here, but as you were speaking about it, it just made me think about what we've done here at Pronovos, and especially going back to the capital needs. You know, if I'm a contractor and I know that I have, let's say I'm a general contractor. In your example, you said, if I'm a large general contractor and, and I typically am not in the need of as much cash to cover my overhead. But suppose I am, so suppose I need to provide a way to release cash at a faster pace without sacrificing the quality of the work. What we thought about here, and I know a lot of people are trying to figure out how to um, uh, uh, reduce day sales outstanding, day sales getting paid, whatever. And what you talk about with credit, you talk about bank lines, loans. There are a lot of ways that I think you can unleash, the stickiness around days to pay. And what we said is, hey, if there's a project that you want to enroll the project in quick pay. Set your subs up so that they could get paid faster.
Yeah.
You share in the margin, all of that. You hit on something that got me excited, Brad. But listen, we talked about the WIP. We talked about some of the key KPIs in the WIP. But you've worked with both manual and reporting and automated dashboards. Let me ask you, what difference does technology truly make when you're trying to help contractors? Truly, you got people, you got personalities, you got processes, you got
Yeah.
technology. No one wants another technology. So I'm curious, from your unbiased perspective, what
Yeah,
difference does technology
I think
make?
I think something you said a moment ago about the Excel spreadsheet going out to ZZZ is one of the reasons I don't have any hair because I pulled it all out because people would add we need something, we just add a column, and it becomes overly. It's not that the information is not necessary; it becomes overly burdensome to have to go back and forth. Like we I think as a profession heavily rely on Excel. There's not anything wrong with that, except it does create some concerns that can be alleviated with technology. For example, a lot of these are listed on your screen here. Time savings, because the information's in a database, so you can pull the information and show it real time. You're not actually entering something in Excel. I mean, I know what we used to do in my old company is we would take the data out of our ERP, dump it into Excel and manipulate it, and then put it back into our ERP. Well, you can imagine, one mistake and it's going to come out in the financial statements incorrectly for one job. And if it's a big job or a series of jobs or jobs gets missed, that's a problem. So security of your data, obviously, human error, anytime you have the ability for someone to go in and make a few keystrokes and change some numbers, especially if a lot of jobs, uh, that's a problem. So you've got a security problem, you've got, you know, human error, security that we mentioned, being able to get information at your fingertips when you need it and not having to worry about it being manipulated. It's literally data that's being presented to you exactly as it is in the system. It's not that you would have employees that would purposely manipulate data, although they potentially could if it's in Excel. If it's in a system, you're getting the real picture of what's going on. Plus, it's secure because there's not any way for it to be manipulated. So I think if you're a contractor and you haven't taken a serious look at the technology that's available for a contractor of your size, I think you're cheating yourself. I think a lot of contractors will talk themselves out of making a financial decision to implement any kind of technology because they look at the cost of what it's going to cost to implement, whether
Hmm.
it's software itself or whether it's the consultants to help it get it done, et cetera. And they, well, I can't afford X. And my argument always was, you're paying that now. You're paying for that money now. I know I walked into a contractor about 3 months ago, 4 months ago, and just walked into their office. There were filing cabinets everywhere. There's paper stacked on every desk. And we sat down at the coffee table, and I said, "You're billing people manually. You're getting paper checks in the mail. You're writing paper checks." Um, it was it was like walking back into the 70s in 2025. I mean, everything was manual. And then they said, well, why don't you do some implementation, like convert to ACH, something simple. Well, we just don't think we can afford that. And the cost of what you're doing now pales in comparison to an investment, even a small investment in technology. The ROI for a contractor that's that manually intensive, the return on investment is so fast that you just have to get them to actually take the jump. Once they jump and then they realize, wow, this is great. That's the fight. The fight's getting people to
Yeah.
appreciate what the ROI is.
Yeah. Yeah. What would you say to contractors that have dipped their toe in the water around technology and had a bad experience? I could see how they
Um,
might be adverse to, buying more technology.
yeah, it's funny, I was just talking to a friend of mine in Charlotte yesterday that's a controller of a big contractor there that's I've been friends with her for years. And they implemented a new system. And she was telling me that after 2 years, they're still having problems because the consultants that helped them do it really did not allow them to do things that to me were just incredulous. Like they asked if they should run their systems in parallel, and the consultant said, "No, we can just do a quick cutover." And I'm thinking, you what? You're a $300 million contractor. You just shut your system off and started on a new one without running parallel. She goes, "Well, we didn't know any better." Well, you might imagine that left a kind of a sour taste in their mouth. And they're still dealing with some issues like almost 2 years after the fact. So I can see why that might leave a sour taste in someone's mouth, and they might be avoidant of new investments in technology. But I also would argue that just because you had a bad experience doesn't mean you stop. I'd say this, if you're a contractor, if you have a bad job, do you stop building?
Right.
I mean, so I mean, it's almost like, okay, what did we learn from this that we can put into place next time? So I would say, I would challenge you, if you've had a bad experience, it doesn't mean all the experiences you have are going to be that way. And if you're punishing yourself by not at least taking an objective look of what tools are in the marketplace to help you provide your service more efficiently and effectively.
Yeah. Yeah. Well, so there are other things I could throw at you regarding we don't like change, and if it ain't broke, don't fix it. A lot of other things, but let's just assume technology really can help a company grow. Part of technology, and one of the things that many software providers and technology providers will say is we automate. We're now in the age of AI, which is exciting and scary at the same time. I'm a data scientist. I do a lot with it, and it can be scary. But let's just talk about automation. How did automation change the way you approach your job?
Um, I think.
Sorry, I know that's a hard question, the
Well,
random
no, it's not
question, but
hard. I'm just trying to think of, it's not necessarily a hard question. I'm just trying to think because there's so many um, different ways to take it. I think, okay, let's just take something that most people do today that is pretty much second nature, converting checks to ACH, for example, our direct deposit. Um, you know, when you write a paper check and you mail a paper check in the mail, what a lot of people don't realize, it's probably going to cost you somewhere. I saw a study about this a couple of years ago, $6 to $7 per check once you've added in the cost of the employees that have the different employees that have to touch these checks to get them out. Not to mention the time reconciling paper checks, checks getting lost in the mail and having to be reissued, etc. So by automating that process, you don't have, when you pay it, it's paid unless there's something wrong with the instructions. You don't have paper, you don't have return mail. Realizing uh, there are some entities that just for whatever reason require a paper check. You probably won't get away from them completely. I know I never would. We got it down to about 10 to 15%, I think, when we automated. But how, in terms of how it makes my life easier, I could redeploy an asset. If I had an individual that was reconciling my cash accounts with paper checks, it would take that individual, even with the automated tools of that the bank provides feeds of checks that have cleared and been written. There's still an exercise that you have to go through because of all of that paper that you're having to see if the check cleared or not. If it's ACH, then the payment's been made. It's clear. So you have the ability to redeploy that human capital somewhere where it's adding value to your business instead of sitting there trying to figure out if what checks are outstanding, what checks have cleared. So as far as, and that's just one example, and there are hundreds of examples. It's really more about my ability to sleep at night as the CFO. Like, I would always think about what's going to go wrong, what could go wrong, and what can I anticipate? Well, I wouldn't have to worry about fraudulent checks. I wouldn't have to worry about somebody washing a check. I wouldn't have to worry about somebody missing positive pay if I'm paying by ACH. So and that's old technology. I think ACH was introduced in the early 70s. But I mean, and you can, look at that in the context of what we have today with AI and everything else. There's a multitude of opportunities for companies to automate and make their businesses more efficient. So I think the things that I did and that I would implement and I felt comfortable with, it just allowed me to be more comfortable doing my job. Again, allowed me to sleep at night knowing that, there were certain things I didn't have to worry about. Probably more so than anything.
Yeah, no, that makes sense, and I love the example. It's something that everyone's familiar with. I am still practicing my patience. I sometimes in the grocery store will be behind a person that's writing a check, and it is what it is. But I think I lost my screen here. Sorry. But uh, Brad, I think that that actually brings us to a gosh, let's see. Stop sharing here. I do not know what happened here. Lost my monitor. Um, what I want to do is I know we have like 5 minutes left. I don't have a need to share my screen, but I do want to launch a poll here. ProNovos is a tool that is meant to basically help contractors do a lot of the things that you mentioned, and this is why we exist. We exist to automate. We exist to bring new technology to contractors to help them do their business and have conversations like we're having with you, Brad. So for anyone that would like to have a discussion to talk about WIP automation, KPIs, leading indicators, um, please reach out, and we'd love to speak with you. And Brad, I don't know what part of the world you're in, but you're one of the you're like the who's the guy and then the beer commercial, one of the most fascinating guys. I forget the
The most interesting person in the world.
yeah, the most you're one of those guys.
I think you're
So
stretching. You're stretching, Bruce. You're stretching, bro. I don't think there's that, I don't I appreciate the accolade, but yeah, it's been a fun ride. It's a great profession. Um and I'm finding now in my career, um, you know, I spend a lot. I tell people I'm kind of semi-retired. I don't work. Well, I think I mentioned a couple of times in the in the webcast that my partner and I have a small consulting firm. It's really just the two of us. And our objective is just to try to help small contractors do some of the things in our experience that larger contractors do. And, that keeps me busy enough. But I don't have to. I'm not in a situation where I was younger. When I was younger, when I had young children at home, where I felt like that I had the dependency to do, the necessity to work as hard as I do now. So I'm really kind of enjoying my life a lot more than I did. I mean, I guess I've always enjoyed it, but it's just been more. It's more fun now because I don't have. Only person I have to take care of is myself, and I guess it's an argument that it's probably. The jury's still out of whether I'm doing a good job of that or not, but at least I don't have to worry about it else.
well, Brad, I want to thank you for participating in this. You are someone that I come to appreciate your knowledge, your friendship, and if anyone wants to reach out to Brad, please let me see if I could at least get the screen back up. Again, I don't know what happened to my anyway, Brad.
Yeah,
Please,
we've had our technology challenges. I was going to say, I'm sorry
I
that
know.
you haven't been able to see me the whole thing, but honestly, that's probably not a bad thing.
If anyone wants to reach out to you, Brad, how can they reach out to you?
Sure. So the best way to reach me is my cell phone number is 704-576-5043. And then my firm's name is Ward and Robinson. So my email address is kind of long. It's Brad Robinson, all one word, at wardandrobinson.com. So if you're a contractor basically all we do is work with contractors to do some of the things that we've talked about today, automate processes. We've implemented some surety programs for clients. We do fractional CFO work. So basically, things that your accountant probably wants you to do or needs you to do, but they don't have the independence to do. That's kind of what we do. We love to work with anyone that's out there. So if you have an opportunity and something comes up, we'd love for you to keep us in mind.
Yeah, absolutely. And if you want to speak with Brad, you could also submit a demo request. We'll get your information over to Brad. From the bottom of my heart, I want to say thank you all for joining. Sorry about the technical difficulties. We're still trying to figure out technology around here, but I hope you have a wonderful day. And Brad, thank you again. I appreciate
Thanks
it.
again, everyone. Appreciate your participation. Thanks, Bruce.
All right. Take care.
All right,
Bye
have a
bye.
great day. Thank you.
Thanks.